Good afternoon, everyone. Myself, C. Raj Chawla, Vice Chairman, MSME and Startup Committee of ICI. Welcome you all in this today webinar on GST, customs and trade issues concerning MSME and cross-border opportunities. Being a chartered accountant, we are regularly engaged into the critical aspect of the goods and services tax. But now we should look into custom regulations and the many trade issues that affect micro, small, and medium enterprises. Nearly 5 crore entities are registered under MSME, and the government is making changes many in the interest of these entities. These entities not only generate substantial employment opportunity, but also foster innovation and competitiveness, driving economic growth and development. Today webinar is important as the landscape of international trade and commerce is evolving rapidly. The implementation of GST has been transformative in reform in India's indirect taxation regime, aimed at creating a uniform marketing, simplifying the tax structure, and enhancing compliances. And we are seeing that every month the GST collection is touching new heights. So while GST has streamlined operations and reduced the tax burden for some, it has also introduced complexity that smaller enterprises struggle to negate. Further, custom regulations and trade policies play a crucial role in determining the ease with these MSME can emerge as cross-border trade. Understanding these regulations, overcoming trade barriers and leverages international market opportunities are essential for MSME to scale up their operations. I am sure that today's webinar will be a valuable learning experience for all of us, enabling us to enhance our competitiveness for startup and MSME. And I want to share with all of you that we are going to organize a startup sphere as we did last year at Mumbai. So this year we are organizing a startup sphere at Bangalore from 27th to 29th June. And today is last date for early bird discount. Only by paying a fee of 5,000 rupees, you can register for this 3 days event. So my request to all of you, please join this our startup sphere. So for valuable insight into this subject, we are honored to have our speaker, CA Rajat Chhabra ji, and coordinator, CA Ashish Mitra ji, who will provide expert guidance on the topics. So wish you a great learning. Now over to CA Ashish Mitra ji.
Thank you, respected Dr. C. Raj Chawla ji, Vice Chairman, Committee of MSME and Startup, ICI. It is really pleasure being part of this esteemed group of people. And good evening to all other guests. Today's topic is about GST customs and trade issues concerning MSMEs and also cross-border opportunities. I would like to introduce today's speaker, Mr. Rajat Chhabra, who is a founding partner at Taxcraft Advisors LLP. He has extensive experience of more than 17 years in handling indirect taxes, including customs, GST, excise laws, service tax, foreign trade policy, and the likes. Mr. Rajat has been engaged in assisting numerous clients, multinationals and Indian business houses, as regards transitioning to GST in India and VAT in the UAE. Rajat has advised various Fortune 500 companies in sectors such as financial services, manufacturing, oil and gas, petroleum, infrastructure projects, and the likes, among others. He has been representing clients in proceedings before various quasi-judicial forums in India. He has also been representing clients and industry bodies before various central ministries with respect to issues like Road Tax Committee, Drawback Wing, DGFT, and BS authorities. Rajat has worked as a partner in indirect tax at Economic Laws Practice, a Tier 1 law firm. He has also worked with other reputed organizations such as BMR Advisors, Reliance Industries, and SpiceJet. He is a chartered accountant by profession and a CPA from USA as well. He is also a law graduate and has done his bachelor's in BCom honors from Delhi University. So this is a short profile about today's speaker. About myself, I am Ashish Mitra. I am a CA with more than 12 years experience handling indirect taxes, including customs, GST, and service tax, and foreign trade policy. I've joined TaxCraft Advisors some time back as associate partner, assisting Mr. Vishal Gupta, who handles the daily NCR practice for the firm. Before joining TaxCraft, I was working at Economic Laws Practice as a principal associate in indirect tax practice. So let me share the presentation. I hope it's visible to all.
Yes, it's visible.
Yes, so today's topic is GST customs and trade issues concerning MSMEs and cross-border opportunities. Now, before we start talking about the issues with respect to GST and custom, let's start in brief and understand what are MSMEs. We'll give 4 to 5 minutes to actually understand what MSMEs are and how they play an important role in today's economy in India as well as globally. So MSMEs are micro, small, and medium enterprises. They are the powerhouse of any economy. All those small and medium companies, those which is cottage industries running from houses, running from homes. So all those startups are eventually encapsulated within the term MSME. It has a separate act altogether, Act of 2006, which is separately deals with the entire issues and the likes of medium, micro, small, and medium enterprises. In fact, it has a separate union ministry also, which regulates terms of sale numbers and capital invested. However, they are the powerhouse of the economy, and they cannot be restricted only to those which are registered with the department. It is basically the fulcrum for entire economy in the world. So as we can see that there's silent growth engines of the new India, which operates in different areas across the country. They are they are very essential to the economic development. In fact, these small enterprises are responsible for revival of many industries and brought them back on its feet, like textile, apparels, and handicrafts. They provide employment to a vast majority of population. In fact, all those unicorns of today that we see, ranging from Paytm, Ola, Echo, Cred, all these are ones of MSMEs. So it really gives us a picture how important it is for any economy, for that matter, to promote and develop MSMEs in their economy. In terms of numbers, we can see that more than 6 crores MSMEs today are playing a crucial role in making India stronger and self-reliance. These small economic engines play a huge role in country's GDP. More than 45% of today's GDP share comes from these medium and small enterprises. They provide jobs to a large section of people, and the maximum entrepreneurs, if we can see, comes actually from the MSMEs. All these entrepreneurs who start their businesses from their rooms, from their garages, all these are uh, eventually part of those MSME fold that we can say. These are also responsible for reviving rural unemployment and industrial output after COVID slaps. Further, if we dig deep into the how much employment that they create, we can see that almost 13% of the total MSMEs today who is working are actually registered on Udyam registration. And they contribute almost 42% of the MSME employment. So just from the numbers, we can see that if 13% of the MSMEs are providing employment to 42% of people, it can only be imagined how much the rest of the MSMEs, which are not even registered, are giving employment to the people, right? This is as far as the future goes. Statistics has that Indian economy projected to grow at 8% in 2023, and by 2027 it will reach $4.9 trillion, and most of this growth will be coming from MSMEs. Apart from that, even in retail sector, MSMEs is providing a greater role, and in the next 3 to 4 years, it will be increasing by almost 60 to 70%. Here we'll finish up with the basics about what are MSMEs, and we'll start with customs and trade. I'll hand over it to the honorable speaker, Mr. Rajat.
Thank you so much to the ICAI, and thank you so much to the committee on MSME for giving us this opportunity to share our thoughts on this very interesting subject. Thank you, Ashish, for this background on MSME. So clearly, so far as MSME is concerned, we have understood well that, what significance they hold so far as the Indian economy is concerned. So if we were to share, few critical numbers, MSME share of total exports of India in April to September 2023 itself was close to 46%. Sectors like handicrafts, handloom textiles, leather goods, imitation jewelry, wooden products are, critical sectors where, our folks in MSME have been competing with the global players. So therefore, government is also coming forth. Recently, Mr. Piyush Goyal did mention that even the roadtap benefits, particularly for exports through e-commerce, shall be granted, to MSMEs as well. So these are, some of the numbers and other statistics which throw light as to the importance of MSMEs in the Indian context from an Indian economy perspective. Likewise, if we further go on from a important standpoint, if we were to see engineering goods, gems and jewelry, ready-made garments, rice, chemicals, these all put together, they contribute close to 45% of the total MSME export sector, if we were to look at significant sectors. Yeah. Moving on, let's now have a look at what are the trade barriers being faced by MSMEs, and therefore, what are the key areas where they need to focus, in order to sort their own house, number one. And second, these are also some of the points where government also needs to come forth and, lend a helping hand so far as MSMEs and their compliances are concerned. And this also, we are talking about cross border opportunities. So I'm sure, on this particular webinar there are, CAs who are in industry as well as in practice. So also we will talk about what are the opportunities which come our way. Not only we are talking about opportunities which land in MSME's lap, but at the same time we are also going to speak of opportunities which land to us as professional CAs, where we can add value to our clients and therefore enhance our portfolio. So starting with complex regulatory compliances. So for MSMEs, number one problem remains that, they do not really have sufficient in-house skilled people. So therefore, if they are transacting with a number of jurisdictions, then, navigating through the complex and changing custom regulation wherever, you are dealing with, plus in the Indian context as well, multiple changes are coming on a daily basis. So all of that has to be taken into account while we are, preparing documentation or taking any tax position. Thereafter, ensuring accurate and complete documentation, invoicing, bill of lading, certificate of origin, so on and so forth. At times, this can be very time consuming and taxing. So these are, to begin with, some of the barriers being faced by MSMEs. Thereafter, high costs, so import tariffs, export tariffs are increasing by the day. The transportation cost, is also increasing. Plus, hiring custom brokers to handle paperwork, etc., also is becoming a costly affair. So all of this is something that, MSMEs have been grappling with. Thereafter, lengthy custom clearance leading to, delay. So many times, you have imported something, you were not aware that perhaps some other certification was required, maybe something from FSSAI or BIS, and given that that certificate is not there, you are trying to procure that, you're trying to arrange that, and in the meantime, damage and other charges are there. So these are again, because of uncertainty, because of lack of clarity, because of lack of preparation, these are some of the delays which could cause you dearly in terms of financial implication. I did speak about this particular pointer, lack of expertise. So many a times we see, there is not sufficient in-house expertise available with MSMEs. In those cases, either we develop those capabilities within, guys who know the documentation, guys who know how to, see HSN classification, how to do valuation. We will, of course, at length discuss about all these issues. So, if you can't and you do not have, in-house capability, of course, it makes sense to look for experts outside. But in the long run, I think it's good for every and any organization that we develop in-house capabilities to this effect. Thereafter, technology and infrastructure, absence of latest technology for efficient custom management like EDI, limited access to logistics and custom infrastructure, and of course, it is not a secret anymore that MSMEs do have cash flows constraints. So they have to, navigate through this, with the limited means that they have. And of course, this is where, the government, of course, and the banking channel has been coming forth with some kind of assistance as well on a regular basis. Then, there are trade barriers, non-tariff barriers like, other registrations, BIS compliances, which are very critical while you are importing certain goods into the country. The government of India is very, very clear that anything and everything which lands onto the Indian soil, has to be the best of quality. So therefore, now you have BIS licenses which are applicable. If you are importing chemical into the country, shoes, toys, furniture, you just name it, and BIS is applicable. So therefore, all of these licenses, stringent compliances have to be taken care of. If you are manufacturing goods into in the country and removing those goods in the domestic market, then also BIS certification is applicable. So these are some of the trade barriers which MSMEs have to grapple with. Increased protectionist measures in various countries create additional obstacles. You have like non-tariff barriers. There's another something which is called tariff barriers. So you have duties like additional anti-dumping duty, CVD, so on and so forth. So if it is seen that some goods are being dumped, for example, if say from a jurisdiction China, if certain products are being dumped into the country in excessive volume, then you could look at something, whether as a domestic player, whether you could knock the doors of DGTR and request them that a detailed dive needs to be done, whether or not a levy of CVD or anti-dumping duty should be examined for a particular case. And then of course the risk assessment measures are more often than not inappropriate and inadequate so far as MSME is concerned. Once you don't have rigorous measures of internal audits, internal checks and balances, you may do a goof up in some compliances, and therefore which could cost you dearly in terms of financial implication and at times prosecution as well. So these are some of the difficulties and challenges so far as MSMEs are concerned, and which they are regularly facing. So therefore, given that these are the set of challenges, and here lies our opportunity. For us as professionals, I would imagine most of you must be already advising your clients from a customs compliance perspective, but these are, some 6, 7, 8 areas where all of us need to, hone our skills and see how we can, serve our clients in a better way. If you are in industry, it makes all the more sense to better your skills at this, so that you can serve your respective organizations in the most efficient way possible. So number one, of course, once you are in the business of import and export, there's one correspondence, there's one identification number that you need, which is import export code, which is very easy to obtain. Before this, you also have to get an RCMC registration come membership certificate with any of the business association, FICCI, for example, PhD chambers, for example, so on and so forth. So once you have the RCMC, it become, then you can apply for IC through the portal, and you get this correspondence number, or in all your documents on, shipping bills, bill of entries. This will be a unique number, which identifies you as a separate, legal entity. Thereafter, decoding HSN codes. I think this remains the most critical part of how an ideal custom application, custom implementation should be done in any organization. So whenever you are importing certain goods into the country, you will file a bill of entry, and in the bill of entry you will yourself disclose that this particular good falls under this HSN code. Yeah. So at length, later also we'll discuss about it. So HSN code, if you are importing something, there are 98 chapters under which certain goods can be exported. If we are talking about live animals, plants, then chapter from 1 to 15 is applicable. If we are talking about food products and preparation, chapter 19, 20, 21 kick in. Then moving on, you have chemicals at 28, 29, pharmaceutical products at 30. Again, moving on, 38, 39, again, are different forms of chemicals, plastics, etc. Chapter 40 relates to hoses. Likewise, chapter 61, 62, 63. Before that, threads, and then clothes, and then the metals, and this is how then automobiles. This is how the overall classification has been bifurcated into 98 chapters. 98 chapter being a facilitation measure, where if you are, say, putting together a plant, you could go for a project import and classify your goods as a single stuff, and pay a BCD of 5% to 7.5% as the case may be. This has been done for administrative purpose, so that each and every item is not seen as a separate import, but rather all of that bunch is seen as one single thing, and you pay a rationalized custom duty. So HSN code, you go through the chapters, you go through the chapter notes, section notes, and then there are WCO commentaries as well. So I can tell you that so far as HSN code is concerned, this remains the most litigative item so far as the custom litigation is concerned. So, I won't be surprised if 40 to 60% of the matters, which are facing litigation in customs pertain to classification and classification alone. The idea is simple. So far as the department is concerned, by applying case laws or any other rationale, their endeavor more often than not is that your goods should be classified in the tariff entry, where which attracts the largest rate. So far as assessee is concerned, if you have done a detailed analysis and you believe that a BCD of 7.5% should be attracted, under, say, chapter 85, whereas the department feels that while the goods do belong to chapter 5 but not in the 8 tariff entry which the assessee or importer has classified, then they take a different view, and this is where the Pandora's box opens for the litigation. So therefore, this is one issue where a lot of mastery needs to be done. There's a lot of scope, because not many people specialize in this particular decoding exercise. So this is one area we can definitely develop skills and add a lot of value to our clients. Likewise, there's something known as preferential trade agreements and free trade agreements. I'm very sure that all of you must have heard about it. So, with different jurisdictions, on the basis of negotiations, etc., etc., these contracts, these agreements are entered into. You must have heard about SAFTA. You must have heard about, the recent cooperation agreement we had with UAE and Australia, wherein it's a bilateral, promise. If I am importing certain specified goods within my country, that is India, from UAE, then BCD at the specified lower rate, which will be different from the custom tariff rate, lower than that, that shall be attracted. Likewise, UAE, which accounts for large import, for the fiscal year 23-24, you'll be surprised to know that UAE was the third largest partner with India for foreign trade. So therefore, if they are importing something from India, and they take the benefit of this particular SIPA that we have entered into with them, then they could go for a larger, for shorter BCD rate. So BCD in that case would be much lesser vis-a-vis the normal BCD rate that they will be paying. But of course, there are other requirements to be met. There's a certificate of origin that needs to be obtained, which signifies that a particular level of value addition has indeed been done in the Indian context by the Indian manufacturer, and there are certain other documentation and other things also which need to be taken care of. So again, a very, very prominent area for practice, something that the practicing CA should look at very, very minutely and learn. Then record keeping and compliance is very, very important. Similarly, like classification, valuation also is very, very critical. Whether whatever price is shown on the invoice, any other amount or goods are being given to the other guy, for facilitation. That is important. Whether it is an importation from the related party, then you have a, transfer pricing mechanism in SVB, in customs, which is known as SVB, special valuation bench. The rigors of that one has to go through. And if there are certain other compelling things, is there a license fee involved, is there a royalty involved, so on and so forth. So valuation also is a very, very complex subject and is very litigative. So if a transaction has happened of importation between two unrelated parties and price is the sole consideration, then invoice price is taken as the transaction value. And plus, there are some other pluses. Under Rule 10 of transportation, the goods have come from the US port to the up to the Indian port. That transportation value needs to be added, insurance needs to be added, and there are one or two bits under Rule 10 which have to be taken care of. So once you take care of all of these elements holistically, you can say the valuation shown by us is appropriate for discharging custom duty. It goes without saying that if it's a case of undervaluation, the department will come back to you and allege mala fide, and they will say that you have intentionally undervalued your goods so that you pay a lesser amount of duty. So a very, very prominent area, and again an area where expertise can be developed by our competent professional friends. Thereafter, competent custom broker, so many a times we see at ground level, problems and explanations can be given and things can be sorted. Maybe people dealing at the ground level were not really aware of the product per se, its characteristics, so on and so forth. So a wrong explanation given at that point in time can really land you into trouble. So therefore, it is in the best interest of MSMEs or any organization for that matter that a competent custom broker should be your partner. And trust us, many issues in custom can be nipped in the bud itself, if you have the right guy with you as a custom broker. Thereafter, navigating tax landscape, in as much as classification is relevant for determining the right customs duty, the one integral part of aggregate duties of customs is the GST, IGST element as well. So therefore, uh, it is critical that the right GST is also applied. Once we classify the subject goods under the right HSN code, so that the difficulties of lesser payment of GST is not faced at a later point in time. More often than not, in businesses, of course, now GST is available as a credit. So while you can always say that it's a revenue neutral thing, but of course interest will have to be paid if you have made a short payment of GST to the government of India. Again, I'll just briefly touch, while I did cover the classification aspects, I did say that classification remains the most litigative item under the customs litigation over the custom litigation thing. So from a classification standpoint, Indian custom tariff, has been divided into 98 chapters. I did say this earlier as well. There are 17 sections. These 98 chapters have been divided into two. And ultimately, you have to classify your product to the 8-digit entry, tariff entry. And, the duty belonging to that duty prescribed under the Custom Tariff Act 1975 against that is something that, you will refer. If there are certain exemptions, then you take an effective duty rate. Post that exemption, you add the other elements of IGST and surcharges as well in order to determine the aggregate duties of customs. Then there are section notes, chapter notes, which comprise a lot of definitions, many of them very complex at times. Inclusions and exclusions are there, which have to be respected in order to determine whether or not, first of all, a particular product falls under a particular section. Then within that, a particular chapter, then under which, 2-digit entry, 4-digit entries, 8-digit entry, and then finally you determine. There are rules of interpretation, there are rules of interpretation which are applicable to us. We will briefly touch upon that in the next slide. And there are WCO commentaries as well, plus, the clarification issued by CBIC from time to time, and the rulings by the apex court and tribunal are very relevant in order to interpret how a particular classification has to be done. Then, let's have a peek at very briefly on some of the classification rules. So, if the thumb rule is classification to be done as per the term of heading, section notes, chapter notes, so on and so forth. So a detailed comprehensive study of the terms of the heading, chapter notes, section notes has essentially to be done before we classify a particular product. If, say, a product is being imported in semi skd, semi knockdown condition, ckd, that is completely knocked down condition, then how do you do it? So, the thumb rule there is that treat the finished goods as if it possesses the characteristic FG. So, whatever, parts are being imported, if it has the characteristics of the finished goods, then, you could go for that classification. Then there's another rule of specific versus general. If you have a generic category vis-a-vis a specific category, then of course, you will classify your products under the specific category vis-a-vis the general. So this also is a very, very critical, thumb rule. Then the essential characteristics, mixtures and compositions, so depending upon what gives its essential character, so on and so forth. So, whatever item in the mixture or composition gives the essential character to the product at hand, which is being, evaluated for classification, that needs to be respected. And accordingly, the classification should take place. And then you have the residual method. If, there are two entries which, equally merit consideration for a particular classification, then the rule is later the better. So whichever is later in the, tariff item, that will, that should apply in the given situation. So, while I have, summarized it in 5 to 10 minutes, trust me, many a times the issues are so complex that first of all, you have to go to an expert, who can guide us as to what the composition of this product is. And only then, we can get into the legal jargon of mapping it up with the HSN, commentary, which is the Customs Tariff Act, read with the other commentaries as I did speak of. So this is, something relating to classification, a very, very interesting subject. But it does require, a lot of hard work, a lot of study. You have to be on top of all the clarifications, so on and so forth, if you have to, classify a particular product suitably in the most appropriate manner. Let's look at very briefly, customs valuation as well. So far as the custom valuation is concerned, I did say there's a term called transaction value. So it's very simple that, if two parties are transacting, I am importing goods from a party sitting out of Australia. So if that party, the exporter and the importer, are unrelated parties, number one, they are not related by any stretch of imagination. Number one. Number two, price is the sole consideration. The price which is being shown on the invoice and the price that I have ultimately paid, apart from that, there should be no other movement of money or goods from the importer to the exporter. If these two conditions are satisfied, then whatever is given on the invoice price, that is sacrosanct, that is taken as transaction value. In the transaction value, I did mention earlier as well some of the elements from Rule 10 pertaining to sea transport or air transport, as the case may be, insurance element, and one more is added to arrive at the assessable value. So once we have the TV, we add these ingredients from Rule 10, and that gives us the assessable value. And assessable value is something that you multiply with the aggregate rate of custom duties, which is a combination of BCD, IGST, and also the third element of surcharge. So that is how it is done. Loading of dutiable, non-dutiable items such as commission, tool, dies, etc. So, if in order to make a particular good out of India, I have sent a die, to the guy outside who's the manufacturer, whether I sent it from India or from third country, it has been sent to them, then a suitable, amortization of that particular die or, whatever tool that is, will have to be done at the time of disclosing the valuation here in India, so that, I can, because if I had not sent it to him, he would have procured it on his own, and he would have definitely charged me for those goods being sent to India. So that's the simple rationale. There are some alternative methods, and alternative methods have to be embraced only if the base formula, the base method fails. And the base method will fail if one of the condition is not satisfied, which is price is not the sole consideration. There is something more than the price being shown on the invoice, which is going from the other party. That is the importer to exporter. Or uh, the parties are related, or both things taken together. So if, number one, parties are related, this section 14 formula fails, you come down, or alternative valuation. Number two, if both the elements, which I discussed, that is, there is, price is not the sole consideration and parties are related, even then you go to alternative method. Or third,
You got disconnected for a moment.
yes, please. Am I audible now?
Yes, please go on.
Thank you so much. If formula number one fails, then, whether the goods are identical goods to any other goods which had been imported into the country from the same party, from the same country, having the absolute same characteristic, then transaction value of identical goods, is picked. Similar goods is more or less, the goods are same, that method is picked, it is from the same country, the seller may or may not be the same. So these are two other methods. If, my transaction value cannot be determined as per section 14, then, somebody must have imported it recently, similar goods in similar quantity. But if, goods are not imported to similar quantity, then some adjustment can be done in identical method, goods method, and similar good method. Then a deductive value method. Deductive value method is, and computed is common sense. Ultimately, I am selling that product into the Indian market for 150 rupees, right? What is the typical margin that I should have? Say 10%, right? My 10% of my sale price. So my cost, ideally should have been 135. In 135, I must have spent something in the Indian context, some expenses. Okay, let's deduct that. 10 rupees, 125. If 125 is the price inclusive of duty, using this deductive method, and I know the duty rate is say 20%, then I can, divide this number of 125 by 120, multiply by 100, I will get the assessable value. So ulta chal ke ye method, price nikalna, is a deductive method. When this happen, the officer is not satisfied, the amount that you are showing is indeed very less for that kind of good, for that kind of quality, and, we can't really find any identical comparable, we can't really find any similar comparable. In that case, deductive method typically is followed. Then computed method is, if we have, the idea of the cost, incurred by the exporter there in his manufacturing facility, what is the margin he adds, what is the, expenditure of the goods reaching from, say, Australia port to India port, all of those elements shall be added and a computed value. So computed value method is nothing but additive method. And the earlier one that we discussed was the deductive method. When my selling price in the Indian market, वहां से हम शुरू करेंगे, तो साहब हम डिडक्टिव वैल्यू मेथड वाला फॉर्मूला अपनाएंगे. लेकिन अगर हम मैन्युफैक्चरर का डेटा हमें मिल जाए, वहां से कुछ निकल आए, तो हम यहाँ पे कंप्यूटेड मेथड पे आएंगे. So these are some of the other methods, which are followed by custom authorities when they are not satisfied with the section 14 valuation or methodology that we would have prescribed. Then the residual method, it's a best judgment assessment method. The law says that if none of the methods, as given above, can give you the right answer, then you can adopt or strategize or make any other method, but you have to follow the rigors and spirits of the method, prescribed above. So it should be a reasonable method, they say, और जो elements और जो logic ऊपर वाले method के हैं, that should definitely form part of this method. It should not be, a figment of your imagination. आपने कुछ अलग ही सोच लिया. It should not happen like that. There should be some element of, common sense, and also methods as we discussed. So these are some of the elements. Plus, while this appears very simple when you explain, but trust me, when you are dealing with a situation, the n number of data at hand, this becomes very, very complex as to how the valuation should be done. Plus, there's jurisprudence, plus there are clarifications, so on and so forth. All of that has to be respected. This is fine. We could move to the next slide, please. So, if we were to speak of one or two critical issues which MSMEs and other importers and exporters face, one would be SVB proceedings. I'm sure most of you would be aware of the transfer pricing provisions under Section 92, 92A and related sections under Income Tax Act 1961. Now that's valuation, the cup method, the net margin method. Those are the methods and transfer pricing mechanism on the income tax side. Likewise, we have a similar thing on the customs bit as well, which is known as special valuation branch. So there also, you have to satisfy the relevant officer. There are two critical circulars of February 2016. There are in which, there is an extra A, B, C. You have to, answer 29 questions relating to whether or not, what is your importing from this related party, what is the extent of your relationship, how the shareholding is, so on and so forth. And what price are you giving, is there any other thing you are giving by the name of license fee, royalty, so on and so forth. So these kind of 29 questions are there. You have to explain to the satisfaction of SUB officer that even though I have a relationship with the party outside, that is the exporter, but that relationship in no way affects the price. It's an arm's length price. अगर मैंने किसी independent party से भी लिया होता तो मैंने इसी पे लिया होता. And if indeed I have bought something of similar nature from an independent party, I can definitely corroborate my case.
What happened? Actually, sir, I think Rajas sir had disconnected.
Just give me a second. No?
Yes, sir.
I'm sorry, am I audible now?
Yeah, sir. Audible.
Sorry, I apologize. It appears there's some internet bandwidth issue here.
Oh, no
So,
problem.
this is how the valuation bench, special valuation bench, will evaluate your case, and if ultimately they find that this relationship has not affected any, the price of the goods and the money that you are, it's a arm's length price which you are paying, then we are in a good shape. A positive order will. I'm sorry, am I audible now?
Yes, you're audible.
So, Ashish, if again, the internet issue happens, you may, start taking the session. Yeah.
No problem.
And then likewise, royalty related issues, license fee related issues. So there may be a situation where I'm not only paying for imported goods, upfront. There may be certain other conditions. There may be certain other amounts which are, at a later point in time, are going from the exporter to from the importer to the exporter. So in such cases, the language is whether the cost or fees of royalty, license fee, etc., whether they can be seen as a condition of sale in regard to importation of goods. So this again remains a very litigative issue. There's a lot of jurisprudence on this as to what is.
Yeah, I think while he joins, I may fill it up. So basically, as Rajat was saying, that royalty and license fee, as if it is paid by the offshore entity as part of paid to the offshore entity as part of the purchase cost, then it should be ideally included in the price, and on which custom duty should be paid. Yes.
So, am I audible now?
Yes, yes.
Sure. So, so these are two critical litigative issues from a valuation standpoint, which many of the players are facing. And of course, as a CF fraternity, if we develop capabilities in this, it's a very, very prominent area, and something you will find great interest also in once you start dealing and doing this. So the other aspects, relating to enhancing trade potential of MSMEs. So very important, that all of us as a community, whether it is government, whether us professionals or entrepreneurs, and others, who are building infrastructure into the country, all of us put together have to make a conducive environment so that.
Yeah, sorry. I think he's again getting disconnected. Just to complete his point, so just to make the conducive environment for the MSME sector specifically, it is relevant that they should be given proper support and they should be given specific benefits under the various laws. So on that part, and how we can enhance the trade potential of MSMEs, specifically, we can offer them targeted support in terms of the products that they are dealing in. Then we can also simplify cross-border payments. We can ease up, we'll talk in detail in the subsequent slides, but just in a nutshell, we'll have to simplify cross-border payment, then we have to ease up certain regulatory complexity in terms of waiving of certain kinds of certificates in case those are not relevant for specifically for small enterprises. Then of course, supporting them in terms of enhancing their access to the finances. Now, as a part of solution thing, because we have already talked about in detail what are the problems that MSME sector may face. In terms of the solutions, we can start with talking about capacity building and training. See, MSME sectors are basically always in dearth of working capital. So they always face problem in terms of training and understanding what are the requirements in terms of undertaking international trade. So, providing MSMEs access to trading programs and resources so that they can improve their understanding on the customs and procedures and regulations, that can really help them. And here, Ministry of MSMEs has been actively supporting the MSME sector and companies. They have been holding up regular training sessions for them. But more of such sessions and more inclusive way needs to be done. Then, of course, simplifying the procedures, import and export procedures specifically for MSME sector, that can also go in a long way in helping these companies expand their bases, implementing simplified custom procedures for MSME, such as lower documentation requirements and expedited clearance process. Like we have some kind of AEO certificates where we give specific benefits to companies who fulfill certain conditions. Similar kind of a scheme may also be formulated for MSMEs, where certain companies having a certain level of turnover can be given the benefit to have expedited clearance through customs. Then, of course, government subsidies, offering financial assistance, subsidies or grants to help MSMEs cover the cost of custom duties. That can also help them in saving that part of cost where which is not creditable. Then, of course, technology adoption. Here, government can help and start up system that is right now in India, which is which is specifically catering to the small and medium enterprises. It is also helping somewhere in these micro and medium and small enterprises in having access to the digital tools, which till now was only be accessed by big businesses. Now these small enterprises can also have automation in their systems. Here also, custom processes can be given extension and given help to these companies. Perhaps partnership and networks like these. It is very difficult for MSMEs to access these big firms and companies and industry associations because they always work in silo. It is really beneficial in case they can also be given platform where they can have networks and industry associations, and even industry associations can help raise their issue at larger level and also lend them expertise and support. There also we believe that we can really help these MSMEs grow better. Then access to information, creating centralized information hubs where MSMEs can access to up-to-date custom regulation. Government can play a bigger role here, where they can come up with more such portals and help MSMEs registered on their portals, because we have seen that till now, as per the statistics, only 13 to 15% MSMEs are actually registered. So almost 80 to 85% still, although they are under the umbrella, but still they are not registered. So the more registration aspect should be taken care of by the government. So supportive policies, education and infrastructure improvement can significantly help MSMEs to participate in global trade. Cross-border opportunities for MSMEs. Rajat, you would like to take this?
Sure. Thanks, Ashish. Yeah. So clearly, as we did discuss, there's a lot of potential, in international trade, and MSME, while they have already been contributing significantly, there's much more that they can do. Yeah. So if Ashish, you could come to slide number 26. So, with a very focused approach, the fraternity can do a world of good, not only for themselves, but for MSMEs as well. And these are, a few areas where, a lot of focus is needed if we were to do anything in the context of cross-border opportunities. So clearly, we did discuss what are the critical sectors: textile, handloom, leather, handicraft, automobile parts. So these are, some of the well-recognized, sectors which have been exporting from India significantly. Then foreign demand. So clearly, we can really help our clients find out, foreign potential, in which jurisdiction, what is the demand of which product, so on and so forth. As we speak, I'm in UAE with a PhD chamber, and the idea of this delegation to come to UAE, along with a team of delegation, is to see, what are the opportunities available here, what kind of products, what kind of services is that, something they can export to this jurisdiction, and how they can, enhance their business. So therefore, as a fraternity, it is so very critical that we, are very mindful of such opportunities around us, and we can, in this process, not only help our clients, but while we will help them with regulatory, tax and documentation framework, we will enhancing our business as well. Apart from this, regulatory requirements, we have to analyze India's export policy. What are the certification required, from import-export perspective? What are the FEMA provisions applicable? How the documentation should be? Are there any additional certification required if I were to export goods from India? If we are talking about food sector, in particular, and food has to be, the food items have to be exported to, say, UAE or Europe or Australia or US. There are significant, measures which are applicable to such kind of products in these countries. There are special certifications. For example, we have a certification body called FSSAI in India. Likewise, if anything which is edible in nature have to go to these jurisdiction, there are additional certification of halal, is one there, and there are so many others, which have to be procured. So it is important that, we keep a tap on this, and we can, really help our clients procure these certificates, etc. Plus, whether a particular good that your client intends to import into India, whether, it is prohibited, whether it is restricted. If we do a detailed dive into, foreign trade policy and the related notifications, we will get a glimpse of this as well. Shopping behavior, analyzing regions with strong, prosperity, whether they prefer online shopping more, so on and so forth. If that is the case, then, e-commerce something could be something for your client, which they can take benefit of, and you, of course, will help them with all the regulatory and documentation framework. Likewise, whether it is seasonal trends, whether it is pricing strategy, whether, sorting out and helping your clients with logistics. So these are, some of the areas where a lot of focus needs to be done. A lot of focused approach needs to be adopted from our fraternity perspective, so that we can identify opportunities not only for our clients, but in the process for ourselves as well. Yeah. Then again, some other important factors, I think we have discussed this time and again. How to file documentation, important. Designing your pricing strategy, how the packaging of the product should be, etc., etc., how the terms and condition, how the agreement should be. So these are, important aspects if you were to, advise your clients on a holistic way when it comes to importation and exportation opportunities. Yeah. Then, there's this interesting Niti Aayog report of 2024, wherein they have suggested that these 4 or 5 things they are in the process of doing along with India, which will go a long way in boosting exports for MSME. So these are AI-based one-stop information portal. They are in the process of putting that together, which will have tariff rates, paperwork, sources of finance, what are incentives available for a particular sector, for a particular HSN code, so on and so forth. Promoting e-commerce exports, facilitating measures and reduce bottlenecks to enhance e-commerce export from MSME. Replacing multiple portals for getting different licensing certification, that is creating one single comprehensive national portal, and improving access to export finance and ensuring accurate measurement, etc. So all of this is required. Also what is contemplated here is integration of DGFT data along with the GST and income tax data, so that there's no anomaly when, we are furnishing different data to different authorities, and the assessments and all other things become very, very seamless. So this also, will go a long way, we believe, in the context of enhancing exports for MSME sector. In saving opportunities from a custom standpoint, I think during our discussion, while discussing various facets, we have already discussed this, So FTA PTA is one that we have already discussed. If you are importing something into the country and paying a BCD of 7.5%, and you identify that with that jurisdiction, India already has an agreement in place, there's a likelihood that this BCD of 7.5% could be reduced to a nil as well. Scenario number one. Scenario number two, for example, today I'm importing certain goods from a jurisdiction where we don't have, SAFTA or any other PTA FTA. In that case, can we remap our, imports from some other jurisdiction? Will we get the same quality of goods from some other jurisdiction, maybe at the same pricing or better pricing? Plus, if we could have an FTA PTA benefit with that jurisdiction, holistically, does that really sail through for the organization in a positive way? So these are the kind of analysis and saving opportunities that we can put on table to our clients. Then there's this AEO program. We did discuss about delays. We did discuss about, documentation hassle. So there's this accredited program which is already in place, wherein the custom department views the importer and exporter as their partner. They will check your internal controls. They will check whether or not, proper accounting is being done, whether there are right protocols being followed, how the goods movement is happening, etc., etc. So there are 6 to 8 checks and balances that they check, and once they are satisfied, they give you AEO certification, which means that, if you have to furnish a bank guarantee, that bank guarantee may not be of 100 rupees, which you would have otherwise furnished if you were not an AEO. That bank guarantee could be of $50 or a $25, depending upon what kind of AEO you are. Second, there will be no delays whatsoever in the clearance. Thirdly, you may not pay duty on every consignment. If you're an AEO T2, which is an enhanced level of accreditation, then you can import for first 15 days and pay the duty on the 17th day, and likewise for the second half as well. So there will only be two payment cycles in the whole month. पहले 15 दिन आप import कीजिए, bill of entry file कीजिए, 17वें दिन उसकी पेमेंट कीजिए, फिर 16 से 30 तक आपने जो इंपोर्ट किया 1 या 2 तारीख को उसकी पेमेंट कीजिए. तो इस तरह के बहुत सारे बेनिफिट्स हैं. Litigation which is started against you, that has to be disposed of within 6 months, if you are an AEO. So this is another initiative which, if we have a mastery of, we can really help our MSME and other clients. Likewise, custom exemption, whether whatever is being imported, is there any custom exemption which covers it? We can look at that. Plus, there are government advocacy measures as well, wherein custom exemption for a particular sector, if it is compelling enough, if there's a strong rationale, you could represent before the government of India and even seek a custom exemption on the particular goods that you are importing for a particular sector. Likewise, if any adverse exportation from a foreign jurisdiction is adversely affecting your business, and it is causing injury to the domestic manufacturer, there are measures like anti-dumping, etc. These tools can be suitably utilized, but of course a detailed analysis and thorough analysis has to be done before all of these are adopted. So these are our bits on customs. We believe if we do a detailed dive in all these dimensions, a lot can be brought on table for your clients. It's as simple as that. I always say, in our profession, in the morning, we when we pray, we are praying for the well-being of our client. We always say that if our client grows, we in the process will grow. So therefore, if by putting all these measures we can enhance our client's business, we can become instrumental in enhancing their business, we also enrich our business, we also get more business from them. As they grow, we also grow. Moving on now, the GST section. So in GST, what we have tried to put together, while many of you without a doubt must be dealing with GST issues on a regular basis. So what we have tried to put together here is what are the provisions which are helping MSMEs, in particular the simplified provisions, where they are facing challenges, what are the ideas, how you can assist them, and plus what is more that the government needs to do. Ashish, may I request you to kindly take us through the GST section? I will
Sure.
pitch in as and when
Thanks, Rajat,
required.
for giving me opportunity to present this bit. So GST, as we all know, have changed the entire business scenario for the entire nation. Every sector have got something out of it and have lost something to it. So neatly said, GST has simplified the calculations. There were multiplicity of taxes. They have it has consolidated and subsumed into itself all those taxes. So you have very simple calculation, only one rate you have to pay. Then it somewhere lower down the burden, because many of those taxes which were subsumed were earlier cascading into itself. So somewhere the tax burden has also been overall it has been less. Then fraud prevention also happened, because there is a very robust GST portal that has been created, where data from every corner is being fed in, and then the system itself is so automated, and now government is in the process of bringing AI also into it, that it very much brings down the fraud that reporting can happen through. Then you have easy way to expand it. Earlier, you have a certain business to open, you have to take many registrations. Now you have to take only single registration, the GST, in case you are fulfilling those conditions. And then you have now clear definition of goods and services. In fact, GST Act also has a specific schedules which separately deals with whether a certain item is a good or a service. So that has been a very welcoming move in the GST law that government has made. Moving on to the next thing, how it has simplified the life of MSMEs. Specifically for MSMEs, GST has reduced and did multiplicity of taxes. So yes, they are now required to take only single registration. Operation and compliance has also been online. So previously, under many laws, they have to file a physical return. But once GST has come into play, they have to file only the online return. So it has somewhere brought automation into the system. Then we have seamless flow of credits. ITCs, invoices reported by one entity by the supplier automatically reflects on the portal of the recipient, and then they can cross verify, and then they can appropriately take credits as per the relevant rules. Easy filing of returns. Yes, you can simply open the portal, fill up few figures, and done. You have separate, in case you have large data, you have separate softwares which can help you upload the data, directly pick up the data from your accounting system and fed into the GST portal. So yes, we have a very easy return filing system. Then you have single window system for filing returns. So you have a single place where you have to file your return, respond to notices, even filing appeals and claiming refund. So that's one-stop shop kind of a solution that we have under GST, where we can access to only one portal and then fulfill all these things. Then it's a tech-enabled structure. Enhanced taxpayer services. You have enhanced taxpayer services. You have helpline, which specifically dedicated to taxpayers. Then, of course, it brings transparency to the administration. Every month, GST Council comes up with their update about the changes they have made, and then how many tax you have collected, how many returns you have filed. In fact, you can look at, in case you're dealing with any vendor or customer, you can always look at whether they are tax compliance or not. So in a way, you have very healthy transparency, not in terms of administration, but in terms of dealing with your business partners also. Specifically, if we look at what are the specific benefits that have been extended to MSME under the GST, so we can see that exemption of 20 lakh since inception, which was there for goods, have been increased to 40 lakh. Now, businesses who are dealing in goods having turnover up to 40 lakh, they need not register under the GST. Then you have annual threshold for composition scheme have been increased to 1.5 crore for goods and 50 lakh for services. It has been a beneficial scheme for small taxpayers. They can take the benefit of the composition scheme and pay flat rate on their supplies without taking headache of ITCs. Then you have goods which are predominantly manufactured and used in MSC sector. Government has laid down preferential rate treatment to those specific goods which are dealt with or manufactured by MSMEs, like walking stick, co-ops, power banks, are some of them. Government have also waived mandatory GST registration for MSMEs who are selling through online. Earlier, if you're dealing in online e-commerce, then you have to register mandatorily under the GST. So even small, enterprises working from their home, even starting their business, they have to take registration in case they are utilizing e-commerce. Because as we all know, e-commerce is the order of the day. E-commerce is the next marketplace apart from, that we have today, and it is helping a lot of entrepreneurs. So specifically for e-commerce, government have brought about this benefit that up to 40 lakh and 20 lakh turnover for goods, respective services, they have brought it parity with the offline sellers also. So in the composition scheme, with a turnover up to 1.5 crore, intra-state supplies are allowed through e-commerce companies also. And then for small taxpayers, they can file their return quarterly. So in a way, for every 3 months, they have to file one return. That is helpful, although they have to pay taxes monthly, but at least for the return part, where they have to disclose over the invoices and file it, they have been saved for at least 3 months at a go. Then you have exempted 9C, which is the reconciliation statement. You have to match all the data that you filed with the department with your annual financial statement that you make. So it's a very lengthy exercise, since separate items are treated under the GST as against annual financial statements. So you have to prepare a reconciliation between these two. So government has waived taxpayers having turnover up to 5 crore. They are exempted for preparing this lengthy document. Then let's specifically talk about what are the GST challenges that MSMEs are facing. So now we have talked about that it has made entirely digitized. So although it has a good side of it, but it also has a bad side of it. Complete digitization led to rising operational expenses. Now enterprises has to have these accounting system in place, and they have to license software, because these days now with accounting coming in, the GST coming into play, new companies and startups having their software specifically for tackling these return part has come, and those comes at a cost. So cost part on the operation side has been increased. Then it is also, although GST has brought about single and flat rates on items, still the GST structure over the time by the government has made a bit difficult. A lot of clarification, notification in the last 6 to 7 years have come up, which in a way, at least for small taxpayers, it has made life a bit difficult in understanding. Then you have fines and penalties for non-compliances are so high that it is difficult for MSMEs to omit any of those compliances, even if those are inadvertent mistakes. Then you have onerous compliance of generating e-way bill. Now, e-way bill is still there. If you have any consignment moving above 50,000 rupees, you have to have a e-way bill. So even if you are a small taxpayer, still these rigorous compliance you have to follow. Matching of 2B and 3B is a whole exercise in itself. Every month you have to, if you are taking credit, you have to, follow this 2B versus 3B rule. Although government from its side has done so much to make the life easier, but on the reporting side, if there is a problem, then on the reconciliation side, it automatically flows down to there. So yeah, 2B and 3B mismatch is a great nightmare for any business for that matter. Then solving discrepancies and reconciliations. Lately, we have seen that government officers, department has started issuing notices for reconciliation issues between outward and inward supplies and ITC for past years at least, when GST was developing. So now solving those discrepancies is a great headache, given that government itself was at a learning curve at that time, but still people are facing a lot of difficulties. So SCN, as I said earlier, SCN has been issued to small taxpayers. Sometimes for no apparent mistake, officer failed to notice something and they start issuing notices without understanding much. Of course, so because of this, they are issuing notices, they are issuing DRC 01As, demanding clarifications for obvious mismatches. Then you have GST compliance demands high automation of business. As I said, it requires a lot of automation, because now you have to file everything online. You have to have a system in place through which you can put all the data online. Then you have issues, again, the classification issues, as my colleague earlier mentioned, under the custom. The same comes under the GST as well, because we are using the same tariff, custom tariff that we have under the customs for interpreting entries under the GST. So that legacy issues carry forward from the earlier regime to this regime as well. Restrictions on making intrastate supplies and export by composition dealer. This is one big pain point that we have. While composition dealers MSMEs are part of composition dealers, and they are not able to do interstate supplies, and also they are banned from doing export, because interstate supplies they cannot make once they are covered under the composition. Pay flat rate. You also bereft of taking ITC, although not taking ITC is a cost to the business. Now it is for each business to see whether they are better off taking ITC and having a regular tax registration, or they can go under the composition. What more can be done for?
If I could add something here.
Please.
So, especially, all these challenges and pain points which Ashish explained, these are indeed pain points for MSMEs. So, we did say that, many a times they don't have internal capabilities, internal skilled people who can handle these. Even if not, it is in MSME's own interest that, they hire experts who have this expertise. The bottom line here is that, classification, legacy is borrowed from customs. So GST law is very clear when it comes to classification of goods, under GST, it will be, the concept shall be borrowed from the customs law. So therefore, the same kind of rigorous analysis, the same kind of detailing needs to be done, even in the context of GST. so that we can avoid any dispute at a later point in time. Even though while you may have done your best, it's not in your hands that you may be able to avoid litigation, etc., because many a times the department has a different perspective on. The bottom line is that ground level work, detailing analysis needs to be done in a detailed manner and in a very in-depth manner, so that most of these errors could be avoided. And wherever suitable explanation needs to be given, they should be provided at a reasonable point in time, at the right time, so that the detailed notices, etc., can be avoided. So if MSMEs have their own expertise, nothing like it. Otherwise, they should hire people with suitable skill set who can help them. Thank you.
Thanks, Rajat, for chipping in. Yeah, moving on to what more can be done for MSMEs. So starting with, these are few of the suggestions that we have for which can help MSMEs grow. One is government should allow small businesses to take avail ITC based on only invoices. So right now under Section 16, you have to fulfill a lot of conditionalities before taking credit. One, onerous of them being the supplier must have filed GSTR1 and shown that invoice in its return, and not only that, it must have paid tax on that. Now, big businesses hold bargaining power with their suppliers, but as far as MSEs are concerned, they don't have control over their suppliers. So it becomes very difficult and onerous for them to run after their suppliers so that they can fill these details and file the returns and pay tax. So till the time these two conditionalities are fulfilled, among others, they cannot claim the ITC. Although in the last few years, various courts have given a judgment in favor of assessees, where they said that if if the recipient has paid tax, then it has the responsibility, it has the right to take credit. But since multiplicity of catena of judgments are there from across the board, it becomes difficult to convince any authority which doesn't come directly under the jurisdiction of any court which pronounced a favorable judgment. Then moving on to the next, allowing composition suppliers to make interstate supply. As I said, it's one of the pain point that composition suppliers cannot supply interstate. So cities like Delhi, which is a landlord state and which have access to, businesses have customers who are across the state. So there they cannot supply online. So that is something which is difficult. Then you have another suggestion could be, we can extend time limit for claiming ITC by small businesses. Right now it is till filing of annual return. So in case, so many a time there's a delay in receipt of invoices, in these particular situations, these small businesses bear the brunt. So specifically for MSMEs, something of similar sort can be, thought about by the government. Then, as I said, although it is beneficial that they have to file quarterly returns, the small taxpayer, but at the same time, they have to file monthly 3B and deposit the tax. Now, as far as zero-rated supplies are concerned, they should be allowed to, claim refund on monthly basis, as opposed to the, quarterly returns that they file. Yeah, as I also said, one of the pain point was the applicability of e-way bill provisions. So small taxpayers, we suggest that they should be given some leeway in terms of generating e-way bill, because it altogether adds another layer of compliance and reconciliations for them. Rationalizing interest and penalty provision, yes, for them, their infringements are really inadvertent, and given that they have to take care of everything on their own, being a startup, it becomes difficult sometimes to avoid an interest and penalties. So in case of MSMEs and small taxpayers, at least interest and penalty part can be rationalized. And another one could be like we have 180-day reversal provision in case we don't pay any invoice within 180 days from its date, then it has to be reversed. Now, since MSMEs always struggle with working capital, this 180-day reversal provision should be relaxed for small taxpayers. 2-3 more points which we can add is now currently, as per the advanced ruling provisions, any taxpayer who is who is affected by a particular issue can file advanced ruling. Now in the case of MSMEs, they are small enough to bear the cost to file advanced ruling and go to that path of litigation. So in our idea, association should also be allowed so that MSME associations can file advanced rulings on their behalf, and they can save up the cost. This is one more suggestion in case for the MSMEs, if they file their returns early and on time, maybe they may be allowed some tax credit of 1 or 2% in case they are doing a timely filing of returns. And last but not the least, since MSME doesn't have established product and need product testing, maybe ITC reversal free samples may be allowed to them, because in the initial stages, businesses have to test their products, and for that purpose they have to supply free samples. So in that regard, this could be one suggestion. So that's all we have for the our presentation. Rajat may have the parting comments.
Yeah, thank you so much, Ashish. Thank you so much, professional colleagues, for this opportunity. And I'm sure, this, especially the discussion qua customs and trade laws, would have given you some insights and, made you more aware of the opportunities, which are there surrounding us, where we can, definitely capitalize on those. So there are certain questions also, which have come. Yeah. So, Ashish, should we take them? Yeah, so I shall read out. So question number 1 is whether a registered person under the composition scheme needs to learn HSN code of any input purchases and outward supplies. So this question is relating to the composition scheme. Ashish, you want to take this?
Sorry, yes, of course, they have to have a HSN in place, although in a certain turnover, they need not have HSN mentioned in the invoice. But knowing HSN not only help businesses to identify their product, but they also help us how that they should, what particular rate that they have for the product. So knowing of HSN is, yes, if you have a product, knowing HSN is very important. It also helps us identify whether your product is exempted, whether there is any specific benefit allowed to them. So yeah, knowing your HSN of your product is good. Yeah.
And of course, on the input side, the other party would have already disclosed. So
Yes.
you not, get into the details of that. Second is on what supply GST is levied.
Sorry. Hello.
Yes, please. On what
Rajat, can you repeat?
on what supplies GST is levied?
State both supplies. So the concept of GST is the fulcrum of the GST concept is actually the supply. So anything that comes within the ambit of supply, which is defined under the GST law, you have to pay GST on that. So we have two separate acts among the others, which is which is IGST and CGST. CGST is for central tax, and IGST for interstate, and then you have state and UT GST also. So we have to, GST is levied on interstate and intrastate both supplies.
And any kind of transaction, whether it is barter, whether it is rental, whether it is licensing, everything is defined under Section 7 as supply, and therefore will attract GST. So first qualification is that the particular goods or services which is exchanging hands has to be defined as a supply. Is it a supply? If yes, then you proceed on how the GST shall be applicable. So Section 7 is your answer. You have to go into the details of Section 7 and see whether it is supplied. So under GST, trust us, everything and anything which is exchanging hands commercially between two parties, whether it is goods or service, whether it takes the nature of barter, rental agreement, licensing agreement, sale of goods, anything and everything that you can think of, more often than not, you would find it finds its way in the definition of supply, and thus should be liable to a GST. Thanks, Ashish.
Thank you, Rajat. So over to Devang in case you wish to chip in.
Devang, can we take a couple of more questions? Do we have time?
Yeah, sure, sir.
Yeah. So I think one more question is what kind of documentation needs to be maintained by a composition dealer? And the second is one more is that whether these can be manually done. So yes, so the documentation is very simple. Whatever procurement you are doing, whatever sales you are doing, purchase register, sales register. In any case, as a composition dealer, you are maintaining books, bank accounts, etc. Plus all the invoices. You must keep record of on the procurement side and sales side. While you are not claiming a credit, you are indeed paying a composition fee at the specified rate. But these are the basic documentation that you should have. Second, whether can you do it manually? Yes, there's nothing, in the law which says that it should only be a computer generated document or have to be maintained on Excel or Tally or any other package for that matter. So accounts can very well be maintained in a manual manner, including the invoice. Even that can be manually drawn. There are no, negative assertions qua these points as well.
Sir, there is a three more questions which I am going to share with you.
Yes, please go
Hello?
ahead. Go ahead,
Yeah.
please.
Rajesh, sir, I have shared with you. Rajesh, sir, sorry, Ashish, sir, I have shared with you.
Okay.
Yeah. Only Rajesh,
Hi,
sir.
Ashish. Have the questions, please.
Yeah, Rajesh, sir.
No, I haven't received. Have you shared on?
Sorry.
Give me a moment. First question is GST going to increase compliance burden on the trade? So, the answer is a yes and a no. While, many things which were there previously required have been taken off, there are no Form F required, there's no Form C required, etc. To that extent, it has been, it has eased the life of the assessees. But so far as returns are concerned, yes, there's one return that you file on the 10th or 11th called GSTR1, then 3B, then 99C thereafter. Then within that, you have to do reconciliation as well. Everything that you claim to have procured, whether it is featuring on the 2B, which is on your portal, which is a collection of returns filed by the other party. So yes, in that sense, to some extent, compliance has also increased. But the government is also trying to balance the act. So while their endeavor on this one point is that only no wrong claim of credits should be taken by the assessees in order to safeguard the exchequer. But of course, in the process somebody will have to do some work. So yes, in that sense, some more bit of compliance has been put on the shoulders of assessee. So while some have been taken off, some others have been added, and this also is not new. This particular procedure was in the form of J1, J2 already in Maharashtra, earlier in the VAT regime. So that has been replicated on the India-wide, compliances. So yes, so it's a, 50-50 answer. To some extent, compliances have been taken off, and to other extent, if you see, some more compliances have come in the foray. Yes. So yes, so composition scheme. Next question is whether can I withdraw from composition scheme at a later point in time? So yes, of course you have to comply once you have done it. Once the new year is about to begin, you can take off the composition scheme from your scheme of things, and tell your relevant jurisdictional officer that on a going forward basis. But the related compliances will have to be done. The credits pertaining to the previous purchases you may not be able to claim. So all those logics, all those basic things needs to be done. But yes, from a new fiscal year, you can definitely not go for the composition scheme which you were hitherto going on. Any other question, Devang?
No, sir. So,
Yeah.
there is no any question. No. So, sir, it's time to wrap up. So, okay, sir, I request you to give a vote of thanks to all the participant.
Yeah. So thank you, everyone. It was a really great session that we had. Thanks to the ICI MSME chairman, vice chairman, Dr. Raj Chawla, who has given us opportunity to present on this topic today and bring to fore and educate many guests there who are there and watching this MSME ki Pathshala. We have been following up this MSME ki Pathshala for quite some time, and we were happy when we came to know that we have been invited to be part of these sessions as well. So really, thanks to all of you. Thank you.
Thank you, Ashish, sir. Thank you, Rajesh, sir, for
Thank
giving
you
a
so
wonderful
much
section.
to the ICI and grateful to the Committee of MSME and Startups. Grateful to Mr. CA Dheeraj and CA Raj Chawla for giving us this opportunity. And thankful, first of all, most of all to our participants who could take out time and, spend these couple of meaningful hours with us. We believe that, would have been, you would have find it an interesting session. If there's any follow-up question, you may kindly write to the committee, and we will suitably, get the questions and respond to you at the soonest.
Yeah, sure,
Thank
sir. Thank you, sir, for giving a wonderful session.
Thank you.
Yeah, you can end the meeting. And Rajesh, sir,
Yes, Devang.
sir, for Monday we will discuss